Welcome to the Bitcoin for Corporations show. My name is Pierre Rochard, and today I'm joined by Alex Thorn from Galaxy Digital. Hey, Alex, how are you?
I'm great, Pierre. Thanks for having me.
So you're the head of research at Galaxy.
Yes.
So wanted to bring you on. We're here in Washington, D.C. at the Bitcoin Policy Institute annual summit. You spoke this morning, so excellent job.
Thank you.
And what are the vibes like here at the summit?
I mean, a lot of suits, so I don't know what that says, but I think the vibes are great. They're high. I was here last year. It's about 200 people at the National Press Club. I think it's over 1,000 this year. I mean, it's politicians, business people. I mean, the suit corners are in full force, but it really feels like we're still in the early stages of making America the Bitcoin superpower, as the president promised. But we're a lot farther along than we ever have been. So I would say it feels very positive that good things are yet to come, but a lot of good things are already happening.
So it seems like we're seeing a conjunction of both government adoption of Bitcoin and corporate adoption, financial adoption. Hence the suit coiner. Maybe we count ourselves among the suit coiners.
I think we have to now.
Yeah, tell me, from your perspective at Galaxy, as you're doing research on the market, this phenomenon seems fairly recent. Could we date it to IBIT, ETP last year, or do you think that there's another? Do we have to go back to 2020 with Saylor's first purchase?
I don't think you have to go that far back. Right. Saylor bought in the summer of 2020 for the first time, which was I mean, it's clearly a watershed moment.
Yeah.
But you didn't have any copycats for 4 full years. I mean, really, they all just, I guess MetaPlanet was last year. So maybe 3+ years before anyone else decided to take up the mantle also and try his strategy. Even today, you don't really have many major corporates just holding a little bit of Bitcoin as part of their broader treasury strategy. Not
Right.
yet. Yeah, I think the launch of the Bitcoin ETFs in the US, big moment for the institutionalization of Bitcoin.
Right.
Most of the world's top 20 hedge funds have exposure. You can see that in the 13F filings, just through the ETFs, let alone, in fact, many of them also trade Bitcoin. So that definitely kicked off the big institutional wave. I think the accessibility of the ETFs, this newer trend of the Treasury strategy companies,
Yeah.
is absolutely exploding. I mean, I know of like 40 of them that are at least attempting to do it or launch or have announced that they are. There's a lot of things to talk about there, but I think there's a clear public market arbitrage opportunity that many see when it comes to that strategy. More broadly, though, asset class much more institutional. A lot of the frauds and failures of the prior cycle fully washed out, some in jail. Like, a lot of cleaning up has occurred since 21 and 2. Yeah, the formalization through ETFs, through regulatory clarity, through support from the executive branch of the US government generally, I think makes the asset class much more appealing to institutional investors, including corporations.
So when Saylor first started out in 2020, there was a perspective out there that he should just give the money back to the investors. Like, he shouldn't be speculating or gambling with shareholder money on something that's unrelated to software. Like, what do you think that they missed, or what were the limitations of that view?
Well, I mean, even now, just empirically, that view was wrong.
Obviously, yeah.
Created enormous shareholder value through his strategy. It's not an unreasonable thing to ask, though, right? I mean,
Yeah.
even if you look at something like stock buybacks, when a company has excess cash, basically all the big companies buy their own stock back with excess cash. You have to ask yourself, like, isn't there something even like strange about that? Aren't you supposed to be investing in growing the business to build shareholder value in the equity rather than buying the equity back and destroying it as a way to create scarcity in the float of the stock?
Yeah.
Seems like a strange thing to be doing. Your whole job is to be building the company. And so you could say something similar, criticism about using excess capital on a balance sheet or even raising capital for the balance sheet to do anything, buy your stock or buy Bitcoin. It's a reasonable, I think, thing for people to ask. But that's also, why MicroStrategy was so disruptive. Like, it did work.
Yeah.
Maybe it shouldn't have, but it absolutely did work. Particularly in last fall of 24, MicroStrategy was probably the biggest story in capital markets, all capital markets. That'll be studied for generations to come. It's a true wonder that Michael Saylor pulled off, particularly then when it really just absolutely exploded like summer 24 through like December, and it's still working. He obviously was able to, whether through debt or dilution, raise capital that then, for the most part, has accreted back to the stock.
Yeah.
It's a very strange thing. But because it's empirically been working, now you see a lot of other people trying it as well.
One thesis I've heard was that after the halving, a lot of equity investors rotated out of Bitcoin miners because obviously the top line revenue was getting cut in half, and rotated into MSTR as a different kind of play on Bitcoin.
Yeah.
Do you think there's any credence to that, or is that more coincidental?
I mean, mining's a tough business, and you pointed out, right? I mean, top line revenue cuts in half every 4 years, effectively, unless you're growing your share dramatically. So I think it's totally possible. I mean, I don't want to speak ill of mining or mining companies, but
Some of them are becoming Bitcoin treasury companies
Yeah.
and have been accumulating Bitcoin for a long time.
or creating new lines of business. I think about like Marathon Slipstream and like other sort of ancillary services. Probably shouldn't say that because that's an energy term also, but
HPC, AI.
yeah,
all-
exactly, right? I mean, we at Galaxy are basically converting our entire Bitcoin mining operation into AI with CoreWeave, and so I get it. I think that also Bitcoin chopped most of 24. People forget
Right.
something like 200 and plus days of like a range traded, until the election, between basically the March all-time high in 24 and the post-election new all-time high. Basically was
60,000.
I mean, it went
yeah.
from 65 to 48 to 65. I mean, but if you blinked, you could find it at the same price over and over again. So, you get bored with that. Especially if you're a trader, an institutional trader, you really need to trade. That's your job, right? So that's why they love volatile assets, right? Because they can trade them. MSTR offered that also with a growth story and a Bitcoin component. So I buy that. I don't know it like anecdotally myself, but I buy it.
Yeah.
Wish you could access cash without selling your Bitcoin? Ledn is the global leader in Bitcoin-backed lending. They've issued over $9 billion in loans since 2018 and never lost a single Satoshi of client assets. A Ledn loan is different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in under 12 hours, with proof of reserves reports published every 6 months. Ledn gives Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at ledn.io.
And so when we look at, I think the metric people are looking at is MNAV. Okay, how does this make sense? It seems like alchemy to say that you've got let's say $100 of Bitcoin and you're selling it for $200 of shares.
Yeah.
Where do you think that logic is fruitful, and what are the limits to that?
I mean, there are pools of capital that clearly want to own equities and Bitcoin exposure through equity vehicles. You can see that in the ETFs. You can also see it. Yeah, that's one of the, I mean, if I rethink your question a little bit, that's one of the ways I like to ask this question is like, why would you buy the Treasury company equity and not just IBIT or,
Right.
or FBTC, right? Like those are pure Bitcoin exposure.
In an equity wrapper.
In an equity wrapper that's easy to move around. You can use it Fidelity and Schwab and everywhere else. And I think the only answer that I can really come up with is that it's almost like MSTR or MetaPlanet or all these, the ones that are doing well. It's almost like staking. You're earning a yield on the Bitcoin that they own, generated by the future ability to own more Bitcoin. It's like this optionality, right? Like if you own IBIT, your Bitcoin exposure notionally is never going to grow.
Right.
Right.
Sats per share.
That's right. Your sats per share is going to remain fixed. The
and
dollar
actually
value
decrease because of fees.
and they bleed a little bit.
Yeah,
That's right.
yeah.
So I think, MicroStrategy is an example. Michael Saylor, Sharice Jajodia, the team there are experts at financial engineering.
Yeah.
I mean, they truly are creating some of the most interesting bespoke types of securities I think people have ever seen. And that's kind of what you're paying for.
Yeah.
It's almost like a fiduciary. You got a phenomenal financial advisor who's like, look, I'm going to figure out ways to get more Bitcoin that no one's thought of before. And I think that's where MicroStrategy's, advantage is. I don't know whether that is replicatable. And this is one of the things that I look at when I try to, differentiate between these, at least 40 that I know of that are either launching or have launched or plan to launch or have announced they're going to launch, is like, how good are they going to be at tapping the capital markets to enact this strategy? MNAV, like, it still seems strange to me, right? But again, like, I don't think I'm smarter than the market. I look at it working empirically. I don't think it'll work forever for everyone, but clearly, Michael Saylor has a pretty deep and thorough understanding of the pockets of capital in traditional capital markets, and he's designing offerings specifically for those. And it's been working. I mean, how much guy has like 500, almost 600,000 Bitcoin?
Yeah,
It's definitely been working.
it's been working. And do you think it's just about the leverage of doing the convertible bonds, doing the preferreds that allow that?
It's at like whatever moment is right. When the convertible bond investors needed stuff to buy, he offered it, right? And he has the volatility. Says volatility is vitality is one of his many quotable sayings.
Yeah.
And so he had an offering for them, right? And he constructed it in a way that serves the convertible bond market and accretes to. I'm not smart enough to do that, but he, and the same thing, comes up with the preferred liquidation stack, creates sort of like a curve out of his securities that has something for everyone.
Yeah.
To me, that's just brilliant financial engineering. And if he can't, go in the front door, maybe he goes in the side door. Like, he's figuring out all these interesting ways. And he's trying increasingly to figure out ways that aren't dilutive to the common shareholders of MicroStrategy, which is also quite interesting because he can always do that. I think most of the treasury companies we see are actually probably going to have to dilute to raise. Like, I don't think they're going to be as capable of tapping. I mean, think about this. MicroStrategy had a 20+ year track record.
Right.
So it had options. It had everybody knew the stock. It was on every platform.
Operating cash flow.
Operating cash flow. He's able to raise debt in ways that many of these companies will not be able to ever raise, or not for a long time. And so you're going to look at a lot of the other ones are probably going to have to be pretty dilutive in order to raise anything.
But if their MNAV is greater than 1, they would argue that
well, that's right. Well, that's right though. But I mean, if you're owning one of these and knowing that you're going to be diluted forever, who knows? Yeah, I mean, the MNAV, I guess, is the question.
But your stats per share is going to be increased. It's very, so when we look at the size, the relative size, right, strategy is just way ahead.
Yeah.
And so that gives them economies of scale from a leverage financing perspective.
That's right.
Do you think it also gives them diseconomies of scale in the sense that the smaller companies might be able to grow more quickly, have a higher MNAV, and
Totally.
be less liquid, and that working to their advantage?
Yeah, I think that's right. But on the other hand, it depends, again, where these pools of capital from which they're raising are. Do we really think 40 of them can raise enough money to really grow that big? I don't know, right? And I wonder that. And there's a question of saturation as well, right? Like, it kind of reminds me of, like, in 15, 16, 17, 18, a huge crypto venture strategy was to just invest in the new crypto exchange in like every global jurisdiction.
Yeah.
So there were a bunch of big funds that did this, and they literally would go and they invest in the best crypto exchange in the Philippines, and then Brazil, and then whatever.
The next Coinbase was
literally in every jurisdiction, because there are regulatory barriers and I think you're seeing a little bit of that now with the treasury companies. Like, even David Bailey was saying, like, who's going to do the next South Korean one? And right, like,
yeah.
I think at some point, just like it's like an ebb and flow, right? Like, even with the global crypto exchanges, that trade of launching new exchanges in jurisdictions is dead. Most of the big ones, big jurisdictions, probably all of them, already have one or even 2 or 3 big exchanges. Now you see global exchanges like the Binances and Coinbases flowing across borders, right? So it was many, then they start to consolidate, then they combine, and so the launching of new ones, of new treasury strategy companies, I think has to hit a saturation point at some point where there simply is no more convertible bond buyers. There is no more equity demand beyond what's already there.
Yeah.
But that doesn't mean that the ones that so it's almost like there's a great filter that they're going to have to get through.
Yeah.
But at some point, it's really hard for me to believe there's going to be more than 1 or 2 big successful Bitcoin treasury strategy companies in any major jurisdiction. Well, we're in pretty uncharted territory, though. I've never seen.
Yeah.
Have we seen public companies that leverage one asset before? Not really.
It's very unique. It's almost, there's the loophole aspect of it's a commodity.
Yeah.
And traditionally, you would not pile on a commodity on your balance sheet because it goes back to that Simon's debate of, do commodity prices go down long term in real prices? And yes, they do generally because of technology.
Yeah.
Here we have a unique commodity that goes up in value over the long term. So it's creating this unique dynamic.
You also can't do it with securities because then you become like a mutual fund under
Yeah.
the 40 Act, right? So there's like it's like a sweet spot here.
Yeah.
And there is a sweet spot in demand. I mean, you cannot and not just in these companies, but just in public markets are open right now. Companies are going public. Galaxy listed on the NASDAQ, Circle went public. I saw OKX wants to do it. We've heard Kraken wants to go public. There's a giant list of firms in the crypto world that separately want to go public. And then like all of these reverse mergers, which is what most of the treasury companies are,
Yeah.
a lot of them are working and they are raising. So there is demand in public markets and they are getting access to the capital. I think that window is open. It's clearly open right now. I call it a window because you have to assume it closes, not necessarily because of the treasury strategy becoming even less desirable, although I argued it will eventually.
Yeah.
But just because other stuff can happen. The market can turn, people decide to be more defensive. But I mean, as we sit here on June 25th here, the US stock market is effectively at all-time highs again.
Yeah.
After all of that, you could have blinked in like January, taken a nap, gone into a coma, woken up today, and you're basically at the same level. So like, whether it's the tariffs and the Liberation Day and like, V-shaped recovery from that, or, global unrest and war and geopolitics, like US capital markets still looking pretty strong and a lot of demand to take these companies public. So that's why you're seeing it. I mean, that's why they're rushing to market.
Well, are they also trying to time the Bitcoin cycle? To me, it feels like we're in the early innings of a bull market. Others are saying it was a double top, it's over.
Yeah.
Where do you stand on the flows there?
Yeah, I don't think it's a double top at all. And I think it's much more likely that this cycle just looks a lot different. I don't think we're in now you're always going to have the business cycle, right?
Sure.
Like that's what credit money creates. Like it's just, and also just humans are like, cyclical. Like, they get excited, then they get depressed, and that's very natural. I don't think Bitcoin will be immune to that. But at this point, I don't believe that you're going to see a classic, like every 4-year Bitcoin and crypto market cycle in the same way. You've got too much demand. You got too much like passive demand. The ETFs are a great example. I mean, investment advisors do not rotate from Bitcoin to Ether to Solana to random altcoins the way an investor on Poloniex would in 2017,
Yeah.
So it's stickier.
Yeah.
You've seen like consistent inflows basically on, even when there's hiccups, the ETFs come back roaring again. There's plenty of passive demand there that will dampen the cyclicality. I think you're going to start seeing it more in retirement accounts. 401ks are going to start. A lot of people use brokerage windows and retirement accounts now to invest in ETFs. Then you talk about this passive bid. Even if it's just MicroStrategy, Michael Saylor has been bidding on BTC consistently. If you get more of that from him or just more of them and some make it through that great filter and really last, now you've got a whole new passive bid. If the nation states start really doing it, seems hard for me to believe that you're going to have like wild minus 80% drawdowns. Like, doesn't mean you won't see volatility. You absolutely will. But like, think about the holder base too. Like we've seen significant movements from old coins, right? Like people are like, oh my God, is it paper Bitcoin? Why aren't we higher with all this bullishness? I'm like, they're whale selling. Like, I hope people get that. Like people are taking profits.
Well, if you bought it $10 per Bitcoin,
that's
at
right.
100,000,
you might want to.
Life-changing money.
Totally reasonable. But I think the Bitcoin culture, the hodlers like us and online, like forget that like this is a trade for a lot of people. You talk to high net worth people, they're not content with just like, it's going up forever, Laura, right? Like they want to know if US bombs run, is it going to go down? Like I've literally watched like high net worth people sell and then buy back 10K lower, or sometimes get burned and have to buy back higher.
Of course.
But like they do, big capital wants to trade Bitcoin. A lot of it wants to hold it long-term too. I think the question is how much of the Bitcoin is scarce.
Yeah.
Very scarce. How much of the supply is held in long-term holder hands versus available for those traders who really are moving the price more than the long-term holders. And I think it's less and less is available for that trading crowd. So that should also dampen cyclicality, right? The base of long-term hodlers is only growing over time.
So it was kind of a meme that past cycles were triggered by the halving. Do you think that that had any truth to it, and that has changed over time
Yeah.
because the halvings are smaller and
Well, it
smaller.
mattered a lot more in the beginning, right? I
Right.
mean, but you right now on average, in the 2024 was the fourth halving. You have from an average of 900 coins to 450 produced per day.
Yeah.
You know, that's not a lot. I mean, 900 coins is what, $90 million. So, I mean, Bitcoin trades between 10 and $40 billion a day. So,
Immaterial.
yeah, from a volume standpoint, like, so the impact of the halving going forward to me is that it's a quadrennial marketing event for Bitcoin's core feature, which is scarcity.
Right.
And that will never go away. It's a
Yeah.
great, especially, I don't know, Satoshi also designed it. It turns out that it happens 6 months before every presidential election.
Right.
So there's always a really interesting dynamic there with the politics. Like you're always like cutting or hiking at the Fed, like basically when it happens.
Yeah.
So it's always going to draw that interesting comparison, I think, to traditional monetary policy that that will always be there. But I think the impact from the supply side is negligible at this point.
So it's all about demand. And, with these new treasury companies, a lot of them haven't bought the Bitcoin yet, right? They're still working on the transactions. So do you think that there will be like reflexivity of when they start buying, they're going to drive up the price and it's going to attract more treasury companies and it's just going to be a feedback loop?
Yes, possibly. And if not attract more treasury companies, attract more buyers.
Investors in
So
general.
Devlin good, right? The more valuable it gets, I still don't really believe that retail investors are like back in Bitcoin again.
Google search volume is not moving.
I know. And like, look, the ETFs themselves are widely owned by retail.
Yeah.
Probably half of it is retail, I would bet.
Yeah.
But still though, like they're not, I don't know, they got excited in crypto by meme coins last year. Maybe they're more interested in now in treasury strategy, company strategies. But as the price goes up, people are literally just forced to look at it, right? Like it becomes more important, but also, by the way, becomes more useful the more value it is. I know Alex Thorn talks about this a lot,
Yeah.
right? I mean, if you buy Bitcoin and cause the price to go up, you are helping activists worldwide
Their
escape
purchasing power
authoritarianism.
increases.
That's right.
Yeah.
So I do think though, there is a flywheel. I mean, people love to buy. I mean, you watch it, it's hilarious. Bitcoin crashes to 98.5 last weekend, and people are like, "Oh my God, it crashed to 98.5." And I'm like, I set target orders at 93, and I was like pretty hoping it would go there.
Yeah.
No, back at 107, they're like, "Oh man, I missed it," right? And
Yeah.
it's just that it never ends. And I don't know why people don't get this. It's like they still don't quite believe that Bitcoin is here to stay,
Right.
but I think it is. I think it's very clearly here to stay.
Yeah. Well, on that note, thanks for coming on, Alex. Really enjoyed having you on the show.
Yeah,
And let's have you back on soon.
that'd be great. Thank you, Pierre.
Thank you.